This week's listener of the week is eBay God 1000. eBay God 1000. Thank you so much for leaving us a 5-star review. And for those of you listening, if you leave us a 5-star review below, you might be next week's listener of the week. This week on Commercial Real Estate Secrets, we have Mr. Cliff Booth. Mr. Booth is the founder and chairman of Westmount Realty Capital. Mr. Booth, thank you for being on the show today.
Pleasure. Thank you for having me.
Mr. Booth, for the listeners, who are you? What do you do? And how did we get here today on Commercial Real Estate Secrets?
Boy, that's a lot. Who we are. So I founded Westmount Realty Capital about 40 years ago. I'm originally from Montreal, Canada. Have lived in the United States for 45 years. We're a Dallas-based real estate investment and development company. We have been doing industrial real estate for 40 years, along with other products too. But industrial is 2/3 of what we do today. It's the basis of our company. And we've always been intrigued and excited about industrial real estate because of how it's performed for us. And it's kind of the hot ticket, or one of the hot tickets. I can guarantee you that when we started off, it was not. It was kind of, what do we call, the Rodney Dangerfield of the real estate business. Didn't get any respect. It was not sexy. It didn't have all the conferences and everything else. But I think finally the world has woken up to it, and for justifiable and good reasons. There's good news and bad news. The good news is that it's appreciated, and certainly values have increased, and liquidity and everything. The bad news is that it's now a much more competitive space than it ever was.
Mr. Booth, tell me about your beginnings in industrial real estate. What drew you to the industrial space, and how did you get there?
As I mentioned, I'm from Montreal, Canada. I had bought some warehouses before this, but I ended up meeting a number of investors in Canada who are still investors, friends, mentors of mine, who had been doing real estate for a long time. And I'd say it was their influence and their experience with industrial real estate that really alerted me and brought the industrial side of the business really to the forefront, to realize that it was more stable. There was less capital required compared to, let's say, office buildings, triple net rents compared to apartments. And that just kind of set us on a path where we then deliberately searched out more and more industrial opportunities, first in the Dallas area, and then, I think we're in 15 markets today, and have been in close to 30 in the U.S. at this point. And so we have a national profile, and we're vertically integrated. So we manage and asset manage, construct. We do all that stuff in-house, and that's helped. And we do various kinds of industrial, right? A lot of times people talk about industrial, but it's important to know which kinds of industrial. So we do everything across the board, from bulk distribution buildings, high cubed, single tenant, sale leaseback, manufacturing buildings. But I'd say most of what we do, we call multi-tenant light industrial. And most of what we own is infill. So mature locations. You will not see us owning too many buildings that are not close to airports, on freeways, in mature parks. And and multi-tenant more than single tenant, I would say, is also what we generally do. The other thing we do is cold storage. We're big proponents of cold storage, and we've owned a lot of cold storage, and then we're developing ground up cold storage as well.
Tell me, look, I could talk about the evolution of industrial real estate all day long, and what it looked like 10 years ago, 20 years ago, et cetera. But I'm really interested in extracting information from you on cold storage. Obviously, with industrial real estate, e-commerce has taken it from, like you said, the ugly duckling of commercial real estate to the belle of the ball. And that happened, 2010, 2015, 2020 was huge. Can you tell me the story of cold storage? Because I know it's exploding right now. What did it look like in the past decade and compared to where it is today?
Yeah, and that story is still unfolding as we speak. I think we're in early stages of where cold storage is going for a variety of reasons related to, as you were saying, well, first of all, COVID, but just shopping online. And even if you think about your own grocery store, you might have noticed that the salad bar where you take out has changed over the last few years, right? It used to be kind of a small section, and now it's expanded quite a bit. And people want more choices, more diversity, better quality, and quicker in their food choices now than ever before. And that's just one part of it. There's so many other uses of cold storage. But I would say, first of all, on cold storage, most of the buildings in the US are owned by users, right? So if you look at inventory of buildings, those buildings are not for rent. If you look at it from an investment or landlord standpoint, that's number one. Number two, the the age of most of these buildings is quite old. I mean, there's buildings that are, we've owned a bunch of buildings that are 50 years old with low ceiling heights and poor energy management systems, et cetera. So that it's kind of an antiquated inventory, but it just speaks to the demand that even for drugs, chocolates, flowers, food processing, there's a lot of different uses now besides proteins and just regular kind of things that people think about for refrigeration, not just freezer. It's come into its own in a more dramatic way, really because of e-commerce and because of COVID. But it was a great space to be before, and I think it's only going to continue to be better as we start to sort of elevate the quality of the buildings to meet the market demands of where people get their needs satisfied.
So you're saying, correct me if I'm wrong, a lot of the existing product type in cold storage are these older buildings that have been retrofitted to support cold storage. But now you and obviously other developers are developing properties that are retrofitted initially to be cold storage properties.
Well, they're not retrofitting. You're building from scratch. I'll give you a simple stat. The buildings that we're building are 50-foot clear, right? The people who are in cold storage or refrigeration, they live in the cubic world and pallet world. They don't live in a per square foot world. So when you go up 50 feet, and most of the buildings that are older and that we owned and others own, on a good day, you're 24-foot clear.
Yeah.
At 50-foot clear, you can go up 7 pallets. So the efficiency of these buildings, before you even get to, new energy management systems and everything else you can do in a brand new building, but just kind of on a distribution space, but on a pallet cost per pallet basis, they're so much more efficient. Yeah, it's I think it's an exciting time in the cold storage business.
In terms of inventory and cold storage, how much of a lack of supply do you think we have in America?
I don't know how to quantify that. I would say that I've rarely seen in my career um, a supply demand imbalance that we see now. Now, I'm going to give a big proviso here. That doesn't mean that anything works or any location works or any strategy works, right? There's a lot of different demand drivers, and we have a particular philosophy that we're using in our developments. But if you do it right in the right location, I think most buildings that are being built are being built um, for the large tenants coming out of some of the big PL providers, and that makes sense and will continue to be. I think there's an opportunity for the smaller tenants too, that market that has not been served as well. And that's probably where we're going to focus more.
Interesting. What size properties are you finding to be like the
We
sweet
think, we
spot?
think kind of the sweet spot is in that, uh, let's call it 250 to 300,000 square foot range.
Sure.
Yeah.
What are unique challenges you are finding when developing these cold storage?
finding a great piece of land in a terrific location is tough. Most of our industrial markets, as you well know, are mature, and there's been a lot of warehouse development in the last 10, 15 years in the U.S. So there's been a lot of absorption of land. So, and as I said, we're infill oriented. So trying to find a really good piece of land in a mature location with good access, without environmental problems. It doesn't need too much, work on the site. You're putting a lot of ornaments on the Christmas tree. And as a friend of mine says, don't put too many ornaments on the Christmas tree, or the Christmas tree will fall over. So I think that that's the challenge. I'd say one of the major challenges is to find a good site. And that's similar in just warehouse development in general, but even more so for cold storage probably.
Say I'm developing a 200,000 square foot warehouse, and
Yeah.
we'll say, just for round numbers, it's $100 a foot to build. How much more is it to build a cold storage facility as opposed to just a regular?
It's 300 a foot.
Whew.
Yeah. But the rents are
Of course.
support that. Yeah.
My fear, and correct me if I'm wrong, would be your user base is so much smaller, right? If I rent out a warehouse and just 4 walls and a garage door, could have the tenant, my tenants are endless in terms of who I could put in that building. I suppose my question would be, how do you get over the fear of vacancy when you have such a huge specific type of property?
Yeah, no, it's a fair point. You got to be careful. There have been markets where we've overbuilt. We'll probably do that again. And I think you really need to be careful, because at $300 a foot, and, as you say, that, it's a more restricted amount of tenants that are available and interested in leasing them. You got to do your homework. It's like anything else. And we'll be very careful, very conservative. And I would say there's things you can do to mitigate that risk, right? So, I'll give you a couple examples. So our strategy is to lease multi-tenant, not single tenant. We can lease to a single tenant, but we want to outfit the building, and we'll spend more money up front in the infrastructure of the building, flooring, walls, etc., so that we can divide up the space.
Sure.
We think that's a risk mitigator, right? So that if you're opening it up and not only dependent on tenants who want large blocks, but for tenants who need smaller blocks. And the same would be true about convertibility between how much freezer and how much cooler. So if you did outfit the building so that it could be flexible in terms of, how much does a tenant need of freezer versus cooler, and you didn't get that ratio right, if you had a fixed sort of amount and you had a tenant that came along that didn't fit that need, that existing, what was in the building, then you're going to lose a tenant. So we're spending the money up front that it's fully convertible, so that it can be, all freezer, all cooler, 50-50. And don't forget, that's not just for first generation, but for second and third generation tenants. So I think between designing the buildings for multi-tenant and for fully convertible on the cold spectrum, we think that it opens up the leasing possibilities.
What are your lease terms? How long do these cold storage users want to commit to?
Yeah, typically they're longer leases than in general, because though we're supplying the cooling systems and the building itself, there's still, in some cases, could be pretty significant investment that the tenants put in terms of racking systems or whatever else they're doing specifically. So you're seeing a lot of 10 and 15-year leases.
Wow.
Yeah.
Hey, I know these folks going into 50, 100,000 square feet of cold storage space. I know moving is not a weekend endeavor.
No.
And that's why we love our large industrial tenants, because they come and they stay.
Yeah, they're sticky. Yeah.
Let me ask you more round numbers. In Denver, we're seeing rents $10 a foot. $12 a foot, but I like to use round numbers. We'll say $10 a foot for just a Class A facility. How much are you seeing rents, or are you placing rents with cold storage users? How much more?
Over 20.
Wow. Hey, that's great.
Yeah.
It's
Yeah,
fascinating.
it depends on the market, right? Southern California is going to be more than Dallas.
If you could only choose 3 markets in North America to invest in, what are the 3 markets
In general, or cold storage.
for cold storage?
Today, geez, you're making me give away all my secrets here. Um, is that what you call it? Secrets podcast?
Yes, that's
Um, I would say Dallas and Houston would be 2 of them for sure.
Hmm.
Um, the third one, I'd have to give a little more thought. Phoenix is interesting. Atlanta is interesting. We're probably, we own a lot of product in the upper Midwest, Chicago, Milwaukee, Minneapolis, etc. On this strategy, we're probably going to be focused more on the southern half of the country in the Sun Belt. So, it could be a Nashville or something like that.
Interesting.
Most markets are good for cold storage right now.
I believe it, and I'd love to hear it.
Yeah.
Mr. Booth, what makes you happy with what you do every day in commercial real estate?
A couple things. I enjoy working with our team. We have a great team, smart, dedicated, hardworking people, and that I get a lot of gratification about just interacting with them. I would say, so for example, on this cold storage opportunity, I love the endeavor of conceptualizing. So we set out to do something. We have a piece of land under contract. We're in the pre-development stage. So getting an idea, finding a piece of land, pulling it all together, designing the building, and then actually seeing it come to reality, I find that very, very enjoyable too. So it's challenging. It's intellectually challenging. It's a bit of as we were talking about, sort of a jigsaw puzzle, Rubik's Cube, to understand sort of what is it going to look like, multi-tenant, single tenant location, doing really deep dive into the different systems. But yeah, that's fun to sort of, today there's a piece of land, and at some point in the not too distant future, there'll be a building there that will hopefully meet the needs of the marketplace. I think that does give me pleasure.
Mr. Booth, okay, I know that was supposed to be my last question, but I have to ask, how are you navigating challenges in the debt market right now while developing these properties?
Yeah, by putting in more equity. That's the short answer.
That always works.
Yeah, well, not for everybody it doesn't work, right? Some people have chosen to go the other way by putting on mezzanine or preferred equity. That's never been our play, and it's not our play, especially in this higher rate interest environment. We've chosen to, in effect, buy down the debt, and we're doing that in just regular acquisitions. Then you take a cold storage deal or a development deal, let's say. Development is the last place for us that we want to have too much debt on. So it's another risk mitigant, and I would say it's been a big part of our philosophy always, is that what I've seen over my career is the way people get in trouble, generally speaking, in real estate is on debt. Now, you could make a mistake, or you could have some bad luck, or sometimes things change that you didn't account for. But even if you look back to the great financial crisis, the unfortunate people that had debt come due in a 24-month period, even in a city like New York or Manhattan, they were the ones that suffered. If your debt came due, even if the values had dropped in that period of time, but your debt wasn't mature at that time, you probably were okay and lived to see another day. So for me, the lesson is about debt. If you can handle your debt, you can probably live to see another day. And if you can live to see another day in real estate, generally speaking, you probably come out okay.
That was the vein I was always taught in. That was how my family has always pursued real estate, is low debt. But I know, sometimes I'll talk to folks on the podcast and it's debt, lever. And I'm sure there's a million ways to make money in this business, but we come from the more conservative approach as well, where you can't really lose as big with lower debt.
That's it. And listen, you can make money. You can make more money, and certainly more IRR, with using more leverage or preferred equity or mezzanine equity until you don't.
Sure.
And on a portfolio basis, constructing a portfolio, like it sounds like your family's done, and certainly what we've done, you don't know which deal is the one that's going to provide challenges for you. So we've just chosen to say, don't do it, and you sleep better, and maybe you're leaving some money on the table, but I don't care about that. It's more just sort of, how to walk through the world in a safer way.
Yeah. Smart. Mr. Booth, we really appreciate your time today and spilling your commercial real estate secrets. Where can the listeners find you, follow you? Any final words? Yeah.
We're on LinkedIn. We have a website, www.westmountrc for realtycapital.com. westmountrc.com.
Mr. Booth, this has been a great show. westmountrc.com. We really appreciate your time and appreciate having you. And for everybody listening, we'll see you next week.
Thanks, Aviva. Appreciate it very much.
Thank you.
Thank you for tuning in to Commercial Real Estate Secrets. If you have found our podcast to be valuable, please be sure to subscribe, rate, and review on your favorite streaming platforms, and make sure to follow us on social media at Aviva Real Estate. For brokerage services or to get in touch with us, head over to thewarehousehotline.com and submit a contact form. My name is Aviva. This is Commercial Real Estate Secrets. We'll see you next week.